That's working. Get this. Give me a second. What the hell? Live that good.
That most of you completely ignore.
What the hell's happening here? All right, what do we have? That's live. That's live. That's live. This is live. Down here, what do we have here? Oh, what the hell is that? No, 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 no. What? No, no, no. Don't ask. I have not a damn thing. No, that ain't it. All right, let's try this. Okay.
I'm talking about clear search.
Come on, how to get rid of that damn thing? Nothing. Thank you. That worked. Oh, who do we have here? Mark, hi. Hit that damn wrong button. Hit the wrong damn button. Look like an idiot. Phantom, Life Wonders. Mark, how you doing? Robert. Patricia, good evening. Faber, what's going on? Bert. Beto. TikTok, good evening. Gary Migler. Evening. Dividends. What are we looking at? Too lovely. Gary, Javier, Mark. Uh-oh. Thank you, thank you. Getting the ball rolling. What do we have down here? Don't allow. Next. No, it's not made for bloody children. Here we go. Joe, Larry, Mest, Noah. I am Sean Spencer. How are you doing today? Abu Khalid, good evening. Grasshopper, how are you today? Stick Dragon, nice to see you again. Good evening. How you doing down there? How you doing? Dev, how you doing? Brianna? Oh, Brianna. Good evening. Rose, good evening. Beto, not your safe space. King Carp, how are you? Well, Dr. Dev says hello, hello. How are we all doing? Glasses, glasses, glasses. Here we go. Got the studious glasses today. Don't I look studious? All right. Yeah, I don't look too bad for an old man. That's what the kids say. Old man. Kids in the soccer field call me grandpa. Andrea, how are you doing today? Philip, the country mapping. All right. How you doing, Philip? All right. That being said, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I look for a simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified. And those are 2 years. 2 months, not 2 years, decades. My show is on. Costanesta, how are you today? So, they called me old man at the judo club. They call me grandpa. They do. How you doing, grandpa? Yeah. Still, what it is. Robert Butylus. Robert would like to look at Nike first thing on the list. Well, let's take a look at Nike first thing on the list. Let's get rid of this. Of that. Get rid of that. Don't need that. Don't need that. Alrighty. Nike, first one on the list. Who do we have down here? Andrew, how you doing? Dev, how are you? Thanks for looking out. You got it. It has popped up now, all working. Alrighty. Ken Ray, Don, how's it going? Can we look at Core? Jane, we'll look at Core in a minute. Right now, I'm going to look at Nike. Someone asked to look at here. Before I go any further, somebody asked to take a look at AMD earlier today. Okay, sit tight. Jake, good evening. Ford looks good. We'll take a look at that in a little bit also. Just sit tight for a minute. Sit tight for a minute, everyone. So this morning, someone called me up and said they're having an issue with AMD. And they said they bought it this morning. So I pulled it up. Let me go back to the whole thing and show you what I'm looking at. And I think it was something got mixed up somehow in the language, maybe. Maybe it was something misinterpreted. But let's take a look at AMD. And you guys tell me what you think. First of all, let's... Okay, right there. Yeah, that's right. That's right. Okay. All right, so AMD is Advanced Micro Devices. Take 22108, 22108, 22108 is the current price. But look at it. Here's the high, here's the low, here's where it was years ago, and here's where it is now. Look at the momentum. Look at the movement. Okay, she drops, shoots up, drops again, big gap, keeps climbing, and here's the top right there. Pulls back, retrace, pull back, retrace. Here we are right here. She actually jumped up good today. But here's the thing. Let's zoom in and look at the last 90. Here's the last 90. The top, the bottom, where was it? Where is it? Look at the momentum. Up, down, up, down, up. Where do you think it's going next? But before we go there, I want to zoom into the last 30 days and see what the last 30 days looks like, because that's more important than the last 90 days. Because the last 30 days gives me a where do I think it's going next? I mean, think about it. I mean, knowing when a stock is going to move is one thing. Knowing where it's going to move to is another. And it probably might make sense to follow what the other investors are doing and looking at it from a different point of view. So let's take a look at AMD from a different point of view. Hold tight, we got a couple of questions here. Good evening, Ford looks good. John Boy, if you roll it over, do you go for 1% above the strike or 1% above the original investment? It's always the original. Okay. Harry Shaven made $40,000 today. Would never achieve that doing covered calls or this strategy. Well, thank you there, Harry Shaven. I appreciate it, but we are looking for two different things. You made 40 grand today. Good for you. I'm pretty sure you're probably not retired and you probably have a little bit more risk than other people do. But for here, I have no risk factors whatsoever. I mean, I like to be safe because, you know, I am getting older and I can't do the things now that I used to do 10, 20, 30 years ago. You know, and it's very difficult for me to admit this. Hold on. Okay, don't go anywhere. I'm going to answer these questions. Just, you know, sit tight. So let's finish up with AMD. So AMD 30 days ago is at 217. She shoots up to 225 and then drops to 197. So 197 is the bottom of the 30-day period. So from here, from this bottom, to the 30-day high, which was today. Now, it's not just, this move here. She went up, went sideways, and kept on going. But this is the 30-day bottom, and today is the 30-day top. So look at the difference between the bottom and where we are now. And then count it out. How much is that? From 297 to 235. Okay, that's almost 40 bucks. 40 bucks on a $197 stock. Let's call it a $200 stock. So 40 bucks on a $200 stock. That's about 20% between here and here. And that was what? 1 week, 2 weeks? Jumps up 20% in 2 weeks. Why would you buy it today? If it jumps up 20%, you may like it, but it's at the high of the 30-day period already. So why would you buy it if it jumped up higher? It just didn't make any sense. So let's keep on moving. All right. Dr. Deb, hello. Can call me old man to judo. Yep. Okay, so Robert wants to take a look at Nike, NKE. Now, I do have some Nike. Let's take a look. The high, the low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up. Okay, but look at the distance between here and here. Now, all of this over here, that's all history. That's already happened. The only thing that this over here is going to do, it gives me an idea of where the high is for the year, where the low is for the year, and what the momentum looks like. She went up, found the high of the year. Okay, get a lot of profit taken. We find the low of the year right about here. And then from there, she shoots up, pulls back, shoots up, pulls back. That's what stocks do. They go up, they go down. They go up, they go down. And guess what they do next? Oh, yeah. You guessed it. They go up, they go down. That's it. Are you expecting them to come to your house and cook you dinner? Maybe you heard some rumor that they make a really cool barbecue and you're just waiting for them to come over. No, stocks don't do anything but go up and go back down again. That's all they do. They don't do anything else. So if you like a company, if you like Nike, keep your eye on it. Where's a good time to jump in? Where's a good time to take profit? Well, you're not going to find that by looking at the 1-year chart, because all of this, that's all history. That means nothing at this moment. The choice I'm going to make now is for right here. Okay, this is today. I want it right here. This is tomorrow and next day and the next day. That's what I'm looking for. What should be the next play for me if I was going to do Nike this week? Well, let's zoom in a little bit closer. Okay, the last 90 days, which is the last 3 months. Okay, here's the top. Here's the bottom. Here's where it was, and here's where it is. Look at the motion for the last 3 months. Down, up, down, up, down, up, down, up. Look at the distance here. Does it have the momentum? Now, we talked about this about a week ago or 2 weeks ago. We said that this gap right here was going to fill. Because when this baby dropped, I bought it down here. Because, we're Americans. We're stubborn and we're stuck on loving our coffee. But we also love our sports. Okay? So you're not going to get rid of Starbucks and you're not going to get rid of Nike. So Nike bottoms out after a big drop. Well, yeah, now she's going back up again. Great. Let's zoom into the 30 days and see what it looks like. Okay, here's the last 30 days. Remember, the high, the low, where was it? Where is it? Down, up, down, up. Well, how much higher can it go up? Okay, it already filled the gap. Okay, the 30-day high is right here. We're here at 64.5. The 30-day high is at 69. That's another $5 we got to go. But look at where it was. 57 to 65. That's $8. from here to here is a little over $8. Now, a little over $8 on a $50 stock, well, that's about 15% between here and here. So does that make sense to keep pushing for this extra little bit? Or do you think there might be a little bit of pullback before it turns around, keeps going up? I don't know. It's a play that you got to call. Does it make sense to you? Well, maybe we should look at what's called seasonality. That gives us a good idea. What does the stock do year after year after year? What does it do consistently, repeatedly? Does it have a pattern? Does it do the same things year after year after year? Well, that's what we got with the seasonality chart. Okay, now the seasonality chart, if you don't know any better, okay, this is a seasonality chart. It measures the distance, January 1st, December 31st. Okay, you don't see anything but this red line. Reason being is because this blue over here, that represents this year. That little blue dot right there. We're the 5th day of the year. How far did you think it was going to get? Okay, January 1st, December 31st. Okay, so that little tiny area right there is this week. But look what Nike has a tendency to do this time of year. Comes down a little bit, goes sideways into February, drops, right into May, goes sideways for a bit, and then right around June, right around the summertime, she shoots up, pulls back towards the end of summer, then the 4th quarter, she goes back up again. That's historical performance. That's what Nike normally does. So does it sound now like it's a good investment? Well, it looks like she should drop a little bit and then go back up in the middle of February. So we're in the 2nd week of January. So hypothetically speaking, it might be a good play. Might be, if you like Nike. So let's go back. Okay, but Nike definitely is in an uptrend at the moment. So the uptrend, the current trend, supersedes or trumps historical performance. Because historical performance is something that already happened. And this is something that's happening right here, right now. Noah, how you doing? Okay, so Jane wants to, wait a minute. Let's do Nike. Let's do it at 64.50. Well, let's see. Does 64.50 sound like a good number? Well, let's check the numbers. We haven't even looked at them yet. Current price, 64.50. The 64 is going for 120. The 65 is going for 63, right around 1%. So let's do the 64s because it sounds like a safer trade. It kind of is. All right, so let's do the 64. See what it looks like. See if Nike at 64 is a good play. Don't know. Let's find out. Let's get rid of this. Let's change this from single to covered stock. So for those of you who might be new, a couple of things. Number one, this screen here, this is live on YouTube. So if you can't see these little tiny numbers right here, maybe if you picked yourself up and go into the other room, sat in front of the big screen TV and pulled up YouTube, you'd find it. The 10-Minute Trader on YouTube, streaming live. I'm actually streaming live on 9 different channels. Believe it or not, I got 3 different YouTube channels. Let me say it. 1, 2, 3. Yeah, 3 different YouTube channels. Anyway, that being the case, let's see what we're doing. Alrighty. So 64.59. We're going to do the 64s and we're going to do the covered stock. Now, I like simple. I like safe. I like predictable. I like consistent. And I love it when all the numbers come together. You know what I mean? Harry Shaven, didn't mean to offend. Harry, you didn't really offend me. It's just that you said you made 70,000 today. 40,000 today. And you'd never achieve this doing covered calls or this strategy. Not necessarily so, okay? Because I did make, I think I made close to 100,000 in 1 week once. In 1 week once, doing covered calls. But then again, the count was huge. So it's always going to come down to, Harry, how much money is in your account. Because when you said you made 40 grand today, that kind of doesn't really mean anything other than the fact that it's a number. Okay, what did you start out with? How long of a play was it? What kind of a play was it? And is it something that's repeatable? Can you do it every day or every week? Something like that's not something I think you cannot do every single day or every single week. Well, I stopped chasing those kind of returns a long time ago. Now, at this point in my life, now when I was younger, yeah, I'd go for those kind of things. But at this point in my life, you guys really need to understand, I'm retired. I don't want to take risks. So I'm looking at safety. Safety first. Okay, safety, predictability, consistency. That's what I'm looking for. Okay, I'm 61. I'm going to be 62 in a couple of weeks. I have no desire to go back to work. So whatever money I have accumulated along the way has to last me for the rest of my days. And I can't take risks. Whatever got you that 40,000 today. Whatever it was. I have no idea what it was. Don't need to know. I need to keep myself focused on what I'm doing. And it's working fine. So I say, fine. It works fine. I don't need that. Anyway, what do we have going on down here? Vino. Nike at 64, but you are selecting 64. You donate, confirming that your shares are called away at a lower price. What's wrong with that? Think about it. All right. So if I buy it currently $64.59, that's the current price. The bid $64.54 and the ask is $64.59. So if I'm buying it, he's right. If I'm buying it at the current price is $64.53 and I sell it for 64, okay, I'm losing that 53 cents right off the top. But remember the premium that I'm collecting, it's not on here. Hold on. The premium that I'm collecting for the 64 is 112. Okay, it's 112 is what I'm collecting. So if I take that 59 cents off there, I'm still walking away with, you're going to make me add this up, aren't you? 47, 59. So I'm still walking away with over 1% by doing this one right here. Do you know what I mean? My goal is 1%. So let's see what that looks like. So if I'm buying it, $64.53, and I sell it for 64, I'll walk away with this. Even with all the math, we take away what I'm losing, take away what I'm gaining, what am I walking away with? Well, let's do the math. All right there. The 64 right there. One contract. I like choosing one contract because it makes the math easier. Here's what it looks like. Buy one covered call Nike. January 9, 26. That means this coming Friday. Okay, so this Friday, this option is going to expire. So, 64 call option. So if I'm buying it at $64.58, selling it at 64, I'm walking away with 62. Okay, that's only about 1%. That's what I'm looking for. 1% every week comes to over 50% per year. Now, the strategy should take you less than 5 to 10 minutes every day. I mean, think about it. It's kind of like getting a pet cat, a pet bird, pet fish, a turtle, or why not do something else? A tree, a bush, a rose, a garden, tomatoes, cucumbers, lettuce, whatever you want to grow. Something that you tend to every day. Well, how about your hair? Brushing your teeth, washing your face, skincare, weight loss, exercise, something you commit to on a daily basis. So if I commit to 10 to 15 minutes, 5 or 10, 15 minutes every single day, cultivating my money. Think about it. Most people get out of high school, go into college, join the workforce, and work 30, 40, 50, 60 hours a year. 60 hours a week, 40, 50 hours a week. 50. All right, anyway. Where are you putting your money? You got to put it somewhere. So, simple, safe, predictable, consistent. It works for me. If it makes sense, great. If not, all the more the merrier, whatever. So here's my profit. Here's my investment. Let's find out what the rate of return is going to be. To find that out, you take the profit, the calculator, the profit, 60/50, and you divide it by the investment. That's 6,338. Cost of trade, including commissions and fees, 63.38. What rate of return is that? Divide 63.38 comes to a grand total of 0.98. So this is the part where we say, no, thank you. Let's take a look at the 65. The 64 didn't work, so let's take a look at the 65, because I still like the company. Let's edit this and change this from 64 to 65. Now let's take a look at it. Profit is 113. The investment is 63.87, just a little bit more. Buy one covered call, Nike, 9 January 26th, that's this coming Friday. The $65 call option against the stock at the market. Okay, so 113 is the profit, 63.87 is the investment. This is going to be more than 1%. 113.50 divided by 63.87 this time. Just a smidge of a change, and that's 1.7%. And there is no discount because we're buying it at 64.53 and we're selling it at 65. So if it hits 65 between now and the 9th, well, someone's going to take that stock away from me and I get all my money back. But this here is separate, and that's always per contract. So if you get one contract, it's 113. You get two contracts, that's 226. 5 contracts, just multiply it by 5. What is that? 565, something like that. Think about it. 5 to 10 minutes a day. Simple, safe, predictable, consistent. Companies you've heard of. I'm pretty sure you heard of Nike. I got 5 simple rules. Well, first and foremost, the trading strategy I'm showing you tonight was created for my 9-year-old daughter. Now, we haven't seen her in a while, so let's pull her up and you'll get to meet her and say, oh, that's her. There it is, a 10-minute trader, live line. Okay, if you want, just book a call. If you want to have a conversation. Now, I don't email, I don't text, I don't WhatsApp, I don't Instagram, I don't face chat, I don't do any of that stuff. You want to have a conversation with me, drop your number right there. Book a call. Either that, leave your phone number right here. Any one of these platforms. There's 9 platforms that we're live streaming to. Any one, leave your number. I'll give you a call. Me personally. I won't pawn it off to someone else. Not, hey, one of my team members will get back with you. No. Me personally. I love talking to people. I love helping people out. Okay, 1% a week is pretty good money for the year. Yeah, he's right. Thank you, Robert. Anthony, how are you today? All right, Harry Shaving got you. Easy money. Why do dividend stocks go up on around dividend pay days as well as not just around the EX date? Well, they usually go up just before the EX date and they go down. All right, hold on. Wait a second. I'm going to do one thing at a time. So sit tight for a second. I'm going to answer that question. I'm actually going to bring some, what do you call it? Visuals. I'm going to bring some visuals. But let's go do this first, finish this off. Okay, over here to get the little hamburger there. Come on, right there it is. I'm well, thanks. How are you? I am delightful. Okay, you, sir, rock. I appreciate the walkthrough. Now I know how to calculate it and how to think about it. All righty, Vino. Glad to see you. All right, so here's all my, what do you call those things? Social media. Instagram, Twitter, Books by James. Yes, I've written, oh, you know what? That's weird. I've written 15 books and I'm not even on my website yet. Isn't that weird? Right there, Books by James, YouTube channel, podcast, TikTok, Facebook, LinkedIn, Patreon, and there's a few others, but we're here to take a look at YouTube, and the reason why we want to go to YouTube is because I stand here every night showing you a trading strategy. As you can plainly see, the 10-minute trader, okay? Every video you ever see me. Hey, everybody, my name is James, brought to you by, wait a minute, my name is James. This is Dividend Stock Talk, brought to you by the 10-minute trader. You check this out. 1,500 videos. That's a lot. And not a single one is AI. Not a single one. Every single one is me standing in front of the camera doing this live. All right. What I wanted to show you was the process. In the videos, we're going to go to the video, okay? The oldest videos. And there she is, right there. Okay, right there, there. But this is the one I want to show you right here, this one. This is my, this
you're going to be getting a complete list of stocks that I'll be trading. And every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the most return on your money.
So anyway, that's the process right there. Hold on a second. And here's the favorite part coming up. Hold on. Here it comes. Here's my favorite part. Yeah. Come on, I admit that's funny as hell. That was 15 years ago when my daughter was 11. Okay. She's 26. Wait a minute. She's going to be 26 now. She's taller than me now. Where did that come from? Okay. The children, they're all here. Now, except for Jacob. Jacob and Beth. The other two are taller than me. Where did that come from? I have no idea. Anyway, so I've been doing this for a long time. Okay. My 9-year-old daughter, she came up to me one day and she said, "Daddy, what are you doing? Can you teach me?" CCs and CSPs, thank you very much. Up, down, trader, nice job, cool beans. How's your investing doing? Mine's going wonderful. If only I can get my princess to be interested in this. Well, unfortunately, that was very short-lived. It was only like five years. You know, from the time she was 9 until she was about 13. After 13, like, forget it. You know, lost to puberty. And if you know anything about little girls at 13, 14, 15, yep, daddy's just a walking ATM. That's it. Let's get back to where we were. No, let's get out of that. We don't need that. Okay, 1.77. We want to hold on to this one. So let's do this. Let's hold on to Nike. Uh-oh, I forgot what number that was. Wasn't that like 1.7? 1.7, okay. 1.7 for Nike. Uh-oh. Why am I seeing this? Where did it go? There it is right there. There it is right there. Nike, 9 January. That's this coming Friday. The $65 call option. 113 is the profit. 6,300 is the investment. So anytime you make any investment whatsoever, you want some type of return, you got to put something in order to get something back. So for a $6,300 investment, you get a whopping 1.7% for this week. But here's the thing. This is not like any other investment because by buying a contract or having the ability to have 1, 2, 5, 10, however many contracts you can afford, that allows you to get a weekly cash flow from every asset that you own. So it's not as if I'm buying stocks. I'm buying or I'm creating weekly cash producing assets. So every single one of my assets or every single one of the stocks that I own, okay, or I control, however you want to look at it, I get a return. Now, preferably, I like to get a 1% return every week. Doesn't always happen. Sometimes I get 3, sometimes I get 4, sometimes I get a half. But my goal is 1%. And my average last year was 1.4% every single week. All right. What are we looking at? Okay, easy money. Okay, wait a second. We saved this one. Okay, we want to save this one. We're not going to go talk to easy money on that scenario. So let's get rid of this. No, I hate it when it does that. It has to reboot. Hate that, hate that, hate that. Don't get me wrong. Some technology is great. But when technology does that, it's not so great. Because again, it interrupts the flow. Right. 1.7. Next on the list. Thank you, thank you. 1.7. All right. So easy money. Why do dividend stocks go up around the dividend paydays as well and not just around the EX date? Okay, so easy money, you got a little bit tweaked on that one. Let me pull it up, show you, and then see if this makes sense. Let's get out of that. Let's get out of that. Let's go back to there, and let's go to right here. Yeah, buddy. Here we go. Okay, what we have here, easy money. Check this out. This January 2026 is what is called an EX dividend date calendar. Simply put, it tells you when stocks are going to pay their dividends. Each one of these little tiny green dots represents a company. Okay? Now, there are over 10,780 companies this week. Now, we check every single week to see how many companies are out there. This week, 10,780. Great, that's a lot. However, out of that 10,000 different companies, only about 5,500, somewhere in that area, pay a dividend. Now, it's kind of important for you to know what a dividend is. Because think about it this way. Stocks or companies that offer stocks do it for a reason. Okay? You may have a great idea. You may have a great idea of producing somebody else wants to buy. Well, great. Well, you make enough of them. You need to hire people to make more of them to satisfy the need that everybody wants. Everybody needs this need. Dr. Seuss, if you didn't know. But here's the thing. In order for you to open up a big, huge business, let me back it up just a little bit more. In 1590s, we're going to back it up. The 1590s, you get a bunch of businessmen get together and said, hey, let's put together a huge company. Hold that thought. Great point. Thank you. Be careful about tax consequences of selling stocks with large capital gains. Okay, Dev, if you're worried about taxes, you need to talk to a tax strategist. There's at least 4 that I found. 4 different ways you can legally not have to pay income taxes, if that's what you think of. Up, down. I wouldn't say that's greedy. I would say that's just doing what you feel is giving you the best return on your investment. Awesome. So as I was saying, In the late 1590s, a bunch of men got together and said, let's create this big, huge company. In order to do this, we need to come up with a bunch of money. So they all got together, wrote up some articles of incorporation, blah, 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 all that legal paperwork, and then took that and went door to door, literally went door to door, offering to the masses, to the people, to the peasants, to the working class. And the pitch was very easy. Tell you what, you give us your extra money, invest in our company, and we will share our profits with you. Well, that company was the VOC, also known as the Dutch East India Shipping Company. And if you didn't know your history, that company ran for 198 years. 198 years. And paid an average of 18% until they, went bankrupt. Why do you think they went bankrupt? Greed and corruption. Think about it. Greed and corruption, it gets to everybody. So, that being said, a dividend stock is a company that shares their profits with you. So, out of the 10,787, however many there is, but there's over 10,780 companies just this week. They keep adding more and more. So, out of all of those, only about half of them pay a dividend. That's these right here. So you got to remember that this is just the month of January. Okay, now there's 4 quarters. Okay, we all know this, 4 quarters: January, February, March, first quarter; April, May, June, second quarter; July, August, September, third quarter; October, November, December, fourth quarter. The interesting thing about the 4 quarters is each quarter has 13 weeks. Each quarter, 13 weeks. So, January 1st and 2nd, 46 companies paying on the first trading day of the year. Look at the first week. All of these companies here are paying a dividend in the second week of the first quarter. Well, guess what? All these companies are going to pay a dividend in 90 days. The first week and the second week of the second quarter. And then they do the exact same thing on the third quarter, and they do the exact same thing on the fourth quarter. So if I like Lowe's and Colgate, Clorox, Lowe's, Colgate, Conastra, no, CAG, Conagra. Yeah, CAG is Conagra. Okay. So anyway, every 90 days, this company will pay a dividend. There's 4 dates to remember. Date number 1 is the announcement date. That's when they come out and say, hey, everybody, my name is James. This is Dividend Stock Talk. This is how much money we made. This is how much you're going to get yours. This is when you're going to get it, and you're going to be happy, and everybody's going to be fine. Way, yeah, something like that. It's the announcement date. That's where they come out and say, hey, this is what we made. This is what you're going to get. The announcement date. Right there. Dividend announcement date. Second date. This is the important one. It is called the EX dividend date, represented by these little tiny green dots. Each one of these green dots represents a company. If you want to collect the dividend, you need to buy it before the green dot. Wherever the green dot is, you need to buy it before. Me, I like to buy it 2 weeks before the dividend, EX dividend date. Gives it time for the stock to move. Date number 3, EX date, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. What do we have down here? I hear ya. Since watching James, I've certainly learned to pick stocks that are ready for an upswing and not already at a high, and have done so much better now that I have to weed out the bad. Hey, nice going, up down. Long list of errors. Just buy VOO, forget it, long-term investment, and day trade dividend stocks. Oh my, I think we just got to volunteer for me to pick on someone. You honestly think VOO is going to get you where you want more so than what I'm teaching you here? We're going at it next, buddy. We are. Sit tight. We're going to go over the VOO, show you how wonderful VOO is. Anyway, so date number 4 is the payment date. That's when you actually get your money. So there's 4 dates to remember when you're doing dividend stocks. Announcement date, EX date, date of record, and the payment date. Okay? So companies that pay a dividend have a tendency to do the same things over and over and over again. So if I like Clorox is paying a dividend on the 1, 2, 3, 4, 5, the 5th week. 5th week of the quarter, which means 5th week of the first quarter, 5th week of the second quarter, and 5th week of the third quarter, and 5th week of the fourth quarter. Every 90 days for companies that pay every quarter. That's what I'm looking for. All right, so let's pick on this dude for a little bit. Long list of errors, likes VOO. Well, what's wrong with VOO? Well, VOO is great for some people, but not for everyone, and really going to depend on what it is you're looking to do. Robert plays spreads on SPX. Ooh. That one, Don't get me wrong, I love spreads. They're great when they work, but it really sucks when they don't work. Right now, we're going to go pick on a long list of errors because he seems to think that VOO is something that's halfway done. Now, it's about investing in the stock market or investing in anything. You need to have access. Now, let me explain to you, Mr. Long List of Errors, why I don't like VOO. Just me. Here it is right here. S&P 500 ETF VOO. First thing I want to look at is the think about it. Why would if it's consistently profitable? Think about it. Seriously. It's your money. Shouldn't you put it someplace that's for your goals? Well, goals is safety, predictability, profitability. That one, that's a good one too. And look at the number one, $132 a share. That's going to wipe out a huge amount of the American population who don't have $632 a share to invest. Because think about it. To do one covered call, you need to get 100 shares multiplied by 632. That's a big chunk of change that not a lot of people are going to have. Well, let's look at why I don't like it. I want to look at the dividends only, and I want to look at as many as I possibly can. Okay? Because I want at least 2 decades of consistent profitability. So, the dividends are a portion of the company's profit. So I get 2 choices here. One, I could actually read 20 years of quarterly reports and annual reports and see how well the company's doing. That's great for some of you guys, but I'm a lazy trader. I am. It's a 10-minute strategy. I don't want to read all day long. Are they actually spending their money wisely? No, cheat. I do. I want to cheat and go right to the dividends because the dividend is a portion of the company's profits. Did you hear that? It is a portion of the profits the company gives back to the investors. So if the company is more profitable this year than they were last year, well, logic, reason, and common sense saying the dividend should be higher this year than it was last year. Now, if the company didn't make as much money this year as they did last year, the dividend's going to be less. Well, that's not something I want. I don't want a company that is less. I want a company that is consistently higher and higher and higher profits year after year after year. And actually, believe it or not, there's a whole bunch of people that go around and keep track of this. There is, seriously. There's a bunch of people that take care and manicure and tend to a list called the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Dividend, a whole bunch of different things, a whole bunch of different lists. Well, let's start at the top of the list, the cream of the crop, the Dividend Kings. Why do you think they got that name? Because they are the best of the best. 5 decades. Do you understand that, my friends, is 10, 20, 30, 40, 50. 5 decades. 50 years. Year after year after year. 5 decades of increased profits. That never comes as a second guess. It's a dividend king? Hell yeah, I'm buying it. If the dividend is coming up and it's a dividend king, don't even question it. As long as the chart's telling me it's the right time to buy it. There's always some kind of caveat. But anyway, I want consistency of profitability. So let's take a look at VOO and see if it has 2 decades of consistent profits. That would take us all the way back to 2005. So let's check out. Here's all the dividends. Here are the dates. So here's 2025, 24, 23, 22, 21, 18, 17, 15, 14, 13, 12. Whoa, 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 oh, there's me. That's only 15 years. So VOO has been around for 15 years. Okay, not quite 20. Should we let it slide? Well, let's take a look. Is it consistently profitable? And if it is, each one of these numbers should be higher and higher and higher and higher and higher. So let's check it out. If the company is consistently profitable, VOO, these numbers should get higher and higher. Let's check it out. 55 is the first dividend. 52, wait a second, time out, time out, time out, time out. If the very first dividend is 55 and the second one is 52, well, I didn't go to college, but I do know, I'm pretty sure that 52 is less than 55. So didn't that go backwards? Didn't they not make as much money? All right, hold on, let's keep on going. 55, 52, backwards. 53, higher. 57, higher. 58, higher. 68, higher. 57. That's backwards again. That's the third time. Third time that they didn't make more money. Backwards 3 times. Hold on. It gets worse. It does. So that brings us to 2012. We're at 64, 68, 94, 2012. Okay. 94, 67. Now hold on a second. 94 to 67 is about a 30% decrease. Did you hear that? 30% decrease. That's not profitable. That's going back. That's 30% less. Now, 1, 2, 5% maybe, but 30% less? Hold on. It gets worse. 73 higher, 78 higher, 91 higher, 77 lower. This is number 5. 5 times it's gone backwards. It means they weren't profitable 5 times. Hold on. 91, 77, 80, 87, 98, 90. 6 times they went backwards. No. 95, 109, 100, backwards. 95, backwards. 88, backwards. That's backwards 3 times in a row. in a row. So now we're up to 8 times losing money. Now, when I say consistently profitable, I mean 2, 5, 7, 9, 11, 13, 15, 18, 21, 23, 25, 27, blah, 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 and so forth. Each number getting higher and higher and higher. Not 2 steps up, 1 step back, 1 step up, 2 steps. No, that's not what I'm looking for. Consistency of profitability. VOO doesn't have it. Hold on. Right now, we're only at 2016. Let's keep going. 95, 88, lower. 129, higher. 99, lower. 101, higher. 117, higher. 118, higher. 108, lower. Now we're up to 10 times this went backwards, and we're only at 2018. We still got years left to go. So I'm not getting any warm fuzzies from this VOO crap. 115, 120, 128, 145, 138, backwards, 130, backwards, 147, 117, backwards, 126. No, I'm just going to say no to VOO. Okay? What I want is pretty simple. I only want 2 things: consistency of profitability and preservation of my capital. I would never put my money into something that's not consistently profitable. Now, let me give you the benefit of the doubt. Let's do something and see if this makes sense to you. Okay? Number 1, Microsoft. We know who they are. Number 2, the share. $20, which would be right there. So let's look at dividends for Microsoft the last 20 years. Okay, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Did you know each and every dividend and higher and higher and higher? It's called consistently being profitable. Think about it. Why would you measure into consistently profitable? VOO is not consistently profitable, and it's $600 a share. But it gets a little worse. Hold on. Let's put in VOO again. And now take a look at the summary and the statistics. Let's just take a look at the summary. What is the yield for VOO? Oh, there's right there. Now, long you see what the yield is. That's the rate of return. You put in a certain amount, the day you collect is divided by the investment, and that's your return. Well, your return on VOO is 1.2. Look it up yourself. The yield, 1.12. 1 per year. And you think VOO is a better choice? It might be for you. You know, if you want to, take all your millions and buy, hey, more power to you. I know I can't. Let's keep on going. Andres. How you doing, Andres? All right, Jane wants to take a look at COR, COHR. To be 100% honest with you, Jane, I've never heard of it. COHR. Coherent Corporation. Okay. No, not that I don't know the company, because I really don't, because I've heard of it before. Besides the point, the reason I'm saying no is this right here. Okay? A year ago, we're at 100. The low of the year is somewhere right around 50. It shoots up to 200. From 50 to 100. Okay, that's a 300% increase. But it started to pull back, and it's all kinds of a mess up there now. Take a look the last 30 days. Look at that mess. Up, down, up, down, up, down. So today got a new high and kind of pulled back, all at the same time. She shot up nicely, okay, tied that 30-day high right here, okay, same thing, but then she pulled back big. Why? I don't know. I have no idea what the company is. I have no idea what they do. See, I don't buy something, Jane, unless I know who it is, what they do. I've never even heard of Core before. So let's go to Yahoo. OHRCOR. And let's take a look at kind of dividends this company's been paying. Okay, historical data. Okay. Finance. Okay, here it is, coherent, COH. Now, wait. Jane, you're new here. Okay? There are no dividends in this time period. Now, the channel is called Dividend Stock Talk. Dividend being the key word there. And the subtitle, Dividend Investing for Weekly Cash Flow. But Jane, Core doesn't have any dividends. So why are we looking at it? Okay, why do dividends? We talked about that one. Shave, if you want to do this, makes sense, excellent. But I'd say take chances with that 52% gain, my brother. Okay, see, the funny thing is, Harry, I'm looking at your picture. Your profile picture shows you as not being 60 years old and being retired, because that face is not the face of a 60-year-old. I'm retired, brother. Me, you think I have? I don't. I don't want to, but I have in order for something that might happen. I'm at that point where simplicity, say profitability, is more important than, okay, I'm not interested in big money anymore. I'm past that point. I don't say that to brag or belittle anyone's efforts, but you got to remember where you are in life. Because as a teenager, this is, but you have money. You're my age, certain things are different. I don't have what I used to have, health-wise, so to speak. Because when you get in your 50s and 60s, things start to just go wrong for no reason whatsoever. But besides the point. Yeah, I'm a little older, brother, so no, I'm not interested in taking my safe gains and putting them at risk. Okay? I'm 61, going on 60, which means I don't have the luxury of being wrong like you do. Now, I'm only saying that assuming, because looking at your picture, you look like you're maybe late, maybe early 40s. I don't know. Which means you got a lot longer to go. And yeah, you can take risks that I would take 10, 20, 30 years ago that I don't take anymore. Because I'm looking for safety more than anything else. Next. Okay, Jane, we looked at Core. Thank you for that. Agreed. I sell spreads on SPX as well. Okay. Bernatello, if my wife asks you questions about our trading, tell her you have a long-term plan. It's a process. Apple CEO brought a bundle of this stock. Okay. But okay, I don't have that he has. Okay, he's an Apple CEO. He's got money to throw away. Seriously, he does. Look at what he gets paid. I'm not even close to that. John, okay, thank you, John. Mike, no one knows the future of Nike, but MSTR will go up 100%. I bought 2 weeks ago at 153, today 165. Thank you, Mike. I appreciate that. MSTR. MSTR. Right. Why I don't buy it. There are no dividends. Now, the reason I do divisible, they do the same thing over and over and over again. They share their profits. The three, they have weekly, some of the ones that I have weekly options, which allows me weekly cash flow. No, it's not on my list because it doesn't have any dividends. Okay, let's see what they're actually doing. MTR. Okay, strategy B. So here's the top here at 450. Here's the bottom here at 150. So she went from 450 all the way to 150. Okay, it has no dividends. So how do I know when it's going to move? So one of the reasons why I like dividend stocks, they have a tendency to repeat a pattern over and over again. If AT&T goes first week of February every single year, well, I want to buy it first week of February every single year based on historical performance. Well, without dividends, how do we know when the stock is going to move? I don't know. So here we are. Here's the high, here's the low, here's where it was, here's where it is. Look at this, down, up, down, up, down, up. Okay, 164.72. 65s are going for 465. That's nice. That's over 2% if you like MSTR, which I don't. Anyway, so let's take a look at it. 165. Let's take a look at MSTR at 154. Who is that? Mike. The 165. There we go, Mr. Mike. Let's buy one contract, see what it looks like. Here we go. Here it is. Buy one covered call MSTR 100, the weeklies. 9 January 26th. That means this option is going to expire this coming Friday. The 165 call option. 474 is the investment. 16 G's is the. Wait a minute. 474 is the profit. 16 G's is the investment. Okay, well, let's see. What does that look like? So we need the calculator for this one. Okay, 74 is the profit. And the cost of the trade, including commissions and fees, 16,026. 16,026 gives a grand total of 2.9%. 2.9. Well, that's nice. I love to get 2.9 every week. So let's save this one. $2.9, you say? And no, it's not a tip. It's not advice. It's just an observation. 2.9. Okay. I said a M-A-S, a T-E-R, a G with a double A. Here we go, MSTR, right there. 9 January, the 165 call option. Well, 474 is the profit, 16 G's is the investment, and that is 2.9% for 1 week. Think about it, 2.9 for 1 week. That's nice. Let's get rid of this. Hate it when it does that. Modern technology, not always that great. All right, what else do we have down here? So, long list of errors. That makes sense what I said about VOO? I hope so. Maine, absolutely. Stocks during earnings week have big option premiums. Yes, they do. Thanks, I figured as much. I make 200 to 400 a day, day trading on average. Today, I lost 16, so whatever. Alrighty then, you have fun with that. New column of my spreadsheet. There you go. Just buy VOO, dollar cost average, and drip. I'm going to say no to that based on what I'm looking for. I'm looking for simplicity, safety, and predictability. I can't get that with VOO. All right. $2.9. 2.9. Gotta love it. That being said, all right. John Boy wants to take a look at eBay. If my wife asks about the count being down 44%, tell her they have strategy for a 9-year-old. Dude. I have no idea why your account is down 44%. And I can't tell your wife anything because I have no idea what you did to have your account down 44%. Papa G, the auctioneer. Hey, James, can we look at Kohl's? Yeah, I love Kohl's. Okay, Eric, we're going to look at eBay first, then we'll take a look at Kohl's. eBay first. We haven't done eBay in a long time. Right, eBay. eBay. Interesting. I'm going to say no only because of that right there. Wasn't that quick? Think about it. Anytime you look at a chart, I'm looking for 5 things. Okay? For me, it takes anywhere between 2 and 3 seconds. Could take 3 to 4 sometimes to isolate whether or not it's even worth looking at. So eBay, not even a half a second, said no. Why? Let me show you. Well, here's the high right here. Here's the low right there. Here's where it was a year ago. Here's where it is now. So why did I say no so quickly? This right here. That's the last 30 days. Well, let's zoom in a little closer. What do you think? 30-day high, the 30-day low. Why would I want to buy it now? It just doesn't make any sense. The run-up already happened. Okay, and what's going to happen now? Well, that baby's going to drop in about a week or 2, maybe longer, maybe not, who knows. If you really like eBay, keep your eye on it. Here's the top right there. Okay, the 30-day bottom right there. Shoots up nicely. It goes from 80 to 90. That's $10. A $10 move on an $80 stock is right around 12%. Not a lot, but still enough to make me say, yeah, no thank you. I'll jump out at 3 or 4%. This is 10 or 12. Yeah, no thank you. Sorry about that eBay one. What took me years to learn, this dude teaches in minutes. Sorry, Vino. Okay, boss. Brother, I've been telling my friends, hey, Daryl, how are you? I'm all ears. Well, let's go. If a company has been successful for the last 3, yeah, dude, any company can be successful for 3 years. Now think about this. Think about this for a second, okay? Brand new companies go out and they do, what do they call it? Fundraising. Okay, so I'm actually going to be doing some fundraising myself, but here's the thing. When most companies do fundraising, okay, that money can last anywhere from 3 to 5 years. So once that money's all gone, now they have to rely on the profitability of a company. That's why I like 20 years of profits. So Eric wants to take a look at Kohl's. Let's take a look at Kohl's. We haven't seen that one in a couple of days. Ooh, I like this one. Eric, that's a good pick. Check it out. Okay, high, low, where was it? Where is it? Look at this. Down, up, down, up, down, up. Okay, right there. Do you see what's happening right there? Now, a year ago, this stuff over here, well, it was important a year ago. But now all it's doing is telling us the momentum of the stock. Okay, it dropped just like everything else did in April. Then it shoots up nicely. It goes from $6. Okay, hold on. Let's do the math really quick in your head. You ready? A year ago, we're at 14. It goes from 14 down to 6. That's more than a 50% decrease right there. 50% decrease. Okay, the bottom's right at 6. Okay, she jumps up to 24. Okay, so 6 to 12 is 100. Okay, 12 to 18 is 200. Okay, 18 to 24 is what? 250%, 260%. That's a nice little jump right there. Well, she pulled back right there. Now she's bouncing off there. So do it slowly. Here it was a year ago. Here's the bottom. Everything bottomed out in April. Take up the ride. Here's the top. You get to the top, there's pullback, profit taking. When profit taking is done, it rebounds, it goes back where it's going to go. Right there. That looks pretty, pretty, pretty. So let's zoom in a little bit closer and see how pretty this can look, Mr. Eric. A year ago, 14.15. We bottomed out at 591. Last 90 days, the last 3 months, the top, the bottom, where was it? Where is it? Look at this. Up, down, whoops. Up, down, big jump up, down, up, down. Now, here we go. Here's the top here. Pullback is there. Now, we got 1-2 days to the upside. Tomorrow should be a perfect opportunity to jump in if and only if you actually like Kohl's. I love Kohl's. It was one of my top performing stocks last year and the year before. Let's look at the last 30 days. Here's the last 30. Here's the top. Here's the bottom. Drops, shoots up. Here's the bottom. Here's the 30-day bottom. 1-2 days to the upside right there. Now, normally, when I see a 30-day bottom here, coming off of a 30-day top, okay, 2 days to the upside, Friday and today, I will want to jump in tomorrow morning as soon as this goes over 21.39. So the 29.50 is going for 44. That's over 2%. If and only if you actually like Kohl's, which I do. And believe it or not, I get a shit ton of money to invest tomorrow. So I'm buying me a bunch of Kohl's tomorrow. Let's take a look at the exact numbers. Okay, the 21.50 right there. One contract at the market. Here we go. Buy one covered call of Kohl's. 9 January, that's this coming Friday. 21.50 call option. Look where the stock is right now. 21.47. If I buy it at 21.47, I sell somebody the rights, not the stock itself, but the right to buy it from me anytime between tomorrow after I sell the option and Friday afternoon 3:59, because we all know at 4 o'clock you can't do anything. So whoever buys this option from me, okay, they're paying $63 per contract. What am I paying? Well, I'm paying $2,000. But I'm the investor. Okay, I got to put up the money. I want the rate of return. Whoever buys it from me, I really don't know. It could be my neighbor. It could be some guy in Timbuktu for all I know. We don't know who's buying and who's selling. We don't know who's at the other end of this equation. But there's someone. If I buy the stocks, 21.47, I got to buy them from somewhere. I have no idea who I'm buying them from. Now, who I'm selling the option to, I have no idea. All I know is the market maker put it up. That's what I'm getting. So, profit, 63 bucks. The investment, $2,087 per contract. Now that's just for one contract. If you can afford 7 contracts, 6, 11, 3, 12, whatever amount you can, that you're comfortable with. What is the rate of return? 3%. Yeah, I like that idea. I do. I like 3%. So let's save this one. All right, 3% for Kohl's. Where is it? Come on, come on, come on, come on, come on. There it is. Buy one covered call of Kohl's. 9 January, the 21.50 call option. 63 is the profit. 2,000 is the investment. That is a 3% return for 1 week. Now, my goal is 1%. Do I get 1% on every single transaction? No. But when I'm buying them, I do. If I sell it, well, do I get my money back? Yeah, of course I do. I get this money back. I hate it when it does that, and it's doing it more often nowadays. It's doing it more and more, and that really bothers me. All right, so Eric Harriel, AGNC. %. Okay, Eric, AGNC is going to be a no. I'm sorry. Now, let me show you why it's going to be a no. So it's just not like I'm disliking it just because you mentioned it. Got nothing to do with you whatsoever. The reason why I don't do AGNC is this reason right here. 0, 0, 0, 0. Okay, that's the premium I would be collecting, Eric. So if I bought the stock, I'd be buying it 11.07. And if I sell the 11s, well, that would give me 12 cents. Well, look at the 11.50. 0, 0, 0, 0, 0. So no, the premiums are horrible for AGNC if you're wrong. Now, don't get me wrong. If you like AGNC and you want to do it, hey, have at it. Have fun. But if it goes the wrong way, what are you going to have the ability to collect? Nothing, 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 and even more nothing. I don't do AGNC. I don't do energy transfer. There's a few companies I just don't do because the option premiums are horrible. It has nothing to do with the company other than the fact, look at this. It's at the high of the year. That's a definite no. But that's not the point. The point is the premiums are horrible and I don't do those anymore. Just doesn't make sense to me. If a company has been successful for the 3 last, no. Can you teach us about implied volatility crush? No. 20 years is a winner. Yes, it is. My whole check. What? Safer route. Gotta love it. This guy is giving good tier knowledge. I'm glad you like it. VOO, I just dollar cost average drip low cost ETF. VOO is not low cost, dude. Definitely not low cost. VOO. Okay? No way, shape, or form whatsoever is $632 a cheap ETF. No, not at 633 bucks. It's not. It's either dividend or growth. I like dividends. Yep, I got implied volatility crushed with options. See, I don't buy options, so I'm not really worried about the volatility crush. Okay, I'm an option seller. Let me grab out my chair. Holy cow, it's 10:40. Wow, we're running out of time. All right, let's see what else we have over here. Eric, thank you. Joe, just say no to VOO. I'm going to listen to you. Dr. Dev, thanks. Hey, side hustle. Did we do Coles? Yes, we already did Coles. He's doing it now. Never mind. I sold a 2150 call option too. I would have done the same thing. James, can you call me after the stream? I can help you fix that issue if you want. Which issue is that, Dr. Dev? Dr. Dev, DM me your number right here. Not on the screen, but I will check it as soon as I'm done. I'll give you a buzz as soon as I'm done here. Okay, the issue with the smart board rebooting. Oh, when you try to add new screenshot. Thank you. Yeah, I'd like help with that one because it's doing it more and more often. Okay, so we're caught up over here. Fancy Live, can I do SoFi? Why do I want to do SoFi? I'm going to say no to SoFi for one reason and one reason only. Look at this. Look at that right there. I'm going to zoom in a little closer and see if you can see it. Okay, here's your last 30 days. Okay, who wanted to look at SoFi? Okay, here's the high. Here's the low. Okay, she was at 27.50. She dropped down to 25. Shot up to 27.50. Dropped down to 25.50. Now she shot up to 30. So it goes from 25.50 to 30. Okay, that's what, $4.50 bucks. $4.50 bucks. 25.50 to 30. $4.50 bucks. Okay, that's not quite 20%, but pretty close to it. From here to here in 2 days. Okay, Friday and today. What do you think is going to happen next? It's at the new 30-day high. Why would I want to buy anything at the 30-day high? Think about it. Seriously. Why would I want to spend my money and buy at the 30-day high? Because what usually happens on a 30-day high? Usually, there's profit taken. Usually comes back down again. Trades by G6. Yay! How are you doing today? Jethro, what's going on? Cash Allison, how are you today? Thank you for that, Cash. ENB, Hendo has a 5%, just don't know how safe. I don't do ENB, which is Enbridge. Okay. The reason I don't do ENB, Hendo, January, February, April, July, these are months of the year, which means that is a monthly option, which means you can trade options on it once a month. So if I'm getting 1 to 2% each month, each option trade that I do, if I do monthly, that's 12 times a year. That's 12 to 24% at the end of the year. But all things being equal, if I'm getting 1 or 2% each option trade weekly, that would be 50 to 100% a year. So it's just a matter of logic. I don't do monthlies because they just don't offer the same amount of rate of return. A large issue with smartboard rebooting when you tried. Okay, yeah, thank you, Dr. Deb. What else do we have here? AGNC, we already said no to that. Fancy Live, how are you doing? AI, thank you. Maxed Up Baseball. Wow, I haven't played baseball since 1974. See, the funny thing is, it's like when you go, my team went undefeated in 1974. So it's like, hang up the cleats, no need to play again. Because you're not going to beat that. You cannot beat a perfect record. So why even bother? Okay? So 1974, my baseball team went undefeated. Quit that. 1976, my basketball team went undefeated. No, gave up that. Okay? I did the track. I did the soccer. I did soccer for 4 years. We never went undefeated. We never even won state champion. But anyway, let's keep on going. Jethro, thank you for that. Cash Allison. Okay, thank you. Trades by G. That's daily or weekly. Weekly. I look for 1% weekly. Look, 86 is in the house. Lily wants to check out SOXI. SOXI. We cannot find that symbol. SOXL, is that it? SOXL. There it is, and that's going to be a no. Okay, now Cindy, Lily, the reason I'm no to this is look at where we are right now. That's the high of the year, kiddo. Why would I want to buy at the high of the year? Look at your last 30 days. High, low, where was it? Where is it? Look at the motion. Up, down, up. Well, where do you think is coming down next? She goes from 36 to 50. That's $14 on a $36 stock. That's just around 20%. No. Sorry, Lily. David, thank you. Ken Ray, Advanced Auto Parts. Ooh, another down day. Now, I actually own some Advanced Auto Parts, Ken Ray, so I'm feeling your pain there. Look at this. Eventually, that baby's going to turn around. Now, Friday was the bottom. Today was a little bit higher. So could Friday be the bottom of the year? It could be. But we're going to need some more data, which means tomorrow, the next day, to see how it reacts. It could be a good opportunity, Ken Ray. Could be. How can you see the KO current price? Simple. Put it right there. Enter like this. Here's the current price right here. 68.25. Okay? Right here. 68.20, 68.25. The bid and the ask after hours. That's the current price. However, it closed today at 67.94. Now, I don't normally do Coca-Cola because besides that it's dropping, 67.94, the 68 would be the closest. It's paying 43 cents. So no, I don't do Coca-Cola. I think I bought Coca-Cola twice in 30 years. 30 years I bought Coca-Cola twice because the premiums have always been horrible with Coca-Cola because they don't really need us. Think about it. Coca-Cola doesn't need us. Okay, they're already number one in the world. They don't really care what we do. We're not big enough to move the needle. Long Beach filmmaker, Fang. Really? You want to look at Fang? F-A-N-G. No. How was that, Long Beach filmmaker? January, February, March, May, June. I don't do monthlies. The numbers just don't work for me. Don't even bother with them. Yeah, okay. Crushed with inflation. Got that. Inconsistent. Thank you. We sell options, not buy them. Okay, IV crush usually comes into play when one buys options. I don't buy options, I sell them. Owning individual stocks have higher risk. I'm not quite sure why you would say that. I'll trade them, but not owning them forever. I don't own anything. The longest I've ever owned anything, I think, was 18 months. And that was Kohl's. And I bought it, and I held on to it because every single week, it gave me 1%, 2%, 3% every single week for a year and a half. And the only reason we got rid of it was, I think it was Walgreens, because it got bought out. It went private. And then it just, all the options just kind of dried up. All right, long list of errors. We're interested in cash flow, not extremely slow stock growth. Dev, I'm going to agree with you 100%. Now, I like dividend stocks with slow growth because they're moving in a direction that I'm okay with. They're moving up. But I want to trade them on a weekly basis. So as you're seeing this, up, down, up, down, up, down, up, down, up, down. Oh, you've seen that crap. Well, I could jump in, sell. jump in, sell, jump in, sell, jump in, sell. Okay, I can do that over and over and over again rather than buying something and just holding on to it. That's not what I'm looking for. Well, that explains it. I'm sure, I hope it does. Dev, long list. You won't become wealthy with ETFs. ETFs are designed for the common man. I'm going to agree with you right there. Long list, higher tax rate there. Now, see, this is where I'm going to disagree with you, the tax thing. All right. Now, I am putting together on the website. I'm looking to get the website redone, number one, because it sucks. It does. I admit it. My website is less than desirable. So I am looking for someone to help me with that. But here's the thing. I'm also going to put on the new website the tax thing. Now, I've been doing this for quite a while. I don't pay taxes only because there's 4 different avenues you can go with the taxes. 4. Okay, depending on what you want to believe and what you want to do. Okay, so federal income taxes are strictly voluntary for those who want to pay it. You want to pay voluntary income taxes? Fine, go ahead, you do that. You don't have to if you don't want to. Okay? When you were young, naive, and didn't really know anything, you volunteered to pay and file an income tax for the rest of your life. That's what that little stupid W-2 form or W-4 form was, whichever one it was. You signed that. It means you're promising to pay for the rest of your life and become a taxpayer. Well, you volunteered to do it. Guess what? You can volunteer to undo it. Okay, we're going to have all that information for you throughout the year. So, that being said, I mean, you got now between now and what? April 15th, whatever that is. Yeah, tax day. You have between now and then. So I have between, the next couple of weeks to get a halfway decent setup so you guys can understand it. Short versus long term. Okay. Wealth is subjective. Absolutely. I'm going to agree with you there too. We have a target of 52% per year. No ETF has ever given that for over 35 years. I'm going to agree with them there too. I haven't seen a single ETF that's actually been consistently over 20. Now, there are a few hedge funds that do rather well. I do like you guys, though, the process. Okay. Just for your information, for those who are not good with math, if you have 1% profit each week, that's a 50% per year. Well, yes and no. Simple interest, yes. Compounded interest is more like 67% compounded, which is kind of like what we're doing. We buy, we sell. That's the first week. Well, you now have a profit. If you don't take that profit out, well, now that profit will build a little higher. And then by week 52, you're getting profit on top of profit on top of profit for 52 weeks. So that comes out probably around 67%. How do you approach a stock at a high dividend percentage? Elnica 1812. I have no idea. If you can explain that question a little bit better, I'd like to be able to answer it for you. It's actually 68% because of compounding. Thank you, Dev. How about TSYY? TSYY. What is that? Granite Shares Yield Boost TSL Tesla 2X ETF. No. Who came up with that one? The Base Assassin. The Bass Assassin. Okay, I'm going to say no because it's a monthly. January, February, May, August. Yeah, no thank you. I don't do monthlies. They just don't pay the same. Next. So, is this investing or option trading channel? That's an interesting question because we are investing specifically for weekly cash flow using pre-qualified dividend stocks. And those are companies that are consistently profitable for at least 2 decades. Okay. So if those are the only companies we buy them, we sell them. We buy them, we sell them. We buy them, we sell them. So is it trading or is it investing? It depends on how you look at it, actually. True, but I prefer to undersell while over-delivering. Thank you there, Dre Thomas. What else do we got? Smart. I agree with that ideology. All right, Deb. Most of these dividend stocks are low to non-existent growth, too conservative for younger investors. I'm going to agree 100%. 100%. It's very low growth for younger investors. So think of it this way. If you had a stock, let's say Coca-Cola, Pepsi, General Motors, IBM, AT&T, Bank of America, any one of those, okay? It's been around for over 100 years. They don't grow a lot, just steady, slow. But if you can trade an option on them every single week, even at 0.5% for the week, that's still over 26% a year. But we're looking for 1%. So if a stock moves consistently, but slowly, consistently increases over the years, slowly, consistently, predictably. See, I'm 62. I'm going to be 62 soon. So that is enticing to me at 62. But at 28, 29, 30, no, I don't want that 1% weekly growth. I want something more. Well, for those people, you're definitely in the wrong place, because I'm looking for slow, consistent, predictable, safely investing. That's what I'm looking for. Simply, safely, predictably, 1% a week. That's what I'm looking for. So we're at 10:57. We've got a couple of minutes left. So let's see what other questions we have. But yeah, you're right. Long list of errors. It's definitely not for the younger crowd. It's a little too slow for them. But here's the thing. My 5-year-old grandson's doing it. But he's 5. What do you think he's going to be when he turns 18, 19, 20 years old? What about REITs with dividends? You stay away or have a few in a portfolio? Yeah, we have a few in our portfolio because they just make sense. Why would I want to see no growth on my initial investment? Well, here's the thing. Okay, if your stock is going sideways, that is perfect for covered calls and spreads if you're doing it right at the right time. Because even at 1% per week, well, in 14 months, that's doubling your money. Simply, safely, predictably, and consistently. 1% a week. What's wrong with that? Now, it's only 5 to 10 minutes a day. You got to remember that part, 5 to 10 minutes a day. Or the more time and effort you put into it, if you know what you're looking for, if you work with someone who's been down that road before. I mean, how many other successful traders that have been trading for 20, 30 years are there? There's quite a bit of them, but are you on the same wavelength? Are you looking for the same things? So it's always going to be, there's always someone who's going to be smarter than you. There's always going to be someone who makes that impossible trade. Doubles, triples, quadruples overnight. They're there. They happen. I'm just unfortunate that it hasn't happened to me. Okay? So I've never, ever, I've been trading for 30 years, never, ever have I picked the bottom. And never, ever have I guessed the top. No. I bought at the top once because I thought it was keep going up, but no, it didn't. Anyway, what other questions do we have? Fang was a no. Thank you. Good evening. Good evening to you too. I bought SoFi at $25.70. Should I sell now that it's up $5 a share? Now, trading, one thing I don't do is I don't give tips. I don't give advice. I don't tell people what to buy and what to sell. But I'll give you a few ideas, just for the fun of it. Okay? Number 1, it's not a profit until you take it. Just like on the opposite side, if you buy something and it drops, it's not a loss until you take that also. Think about it. When you buy a stock, you jump in. You're rolling the dice just like everybody else. You're hoping that maybe you're right, but you just don't know. So what direction is it going to go? So you buy a stock. Maybe it goes up, maybe it goes down. But here's the thing. It's not a profit. It's not a loss until you consciously agree to take it. So if the stock goes down and you say, hey, the stock went down, I'm going to sell so I can save whatever I have left. Well, then you are agreeing to take that loss. Stocks go up, stocks go down. If the stock goes down, look at this one right here. $30 is the high of the year. The low of the year is right around 20. That's a 50% increase. We saw some a little earlier today. 100, 200, 300% increase in 1 year. Yeah, it happens. They go up, they go down. Rule number 1, never buy something you don't want to hold on to. Kevin wants to take a look at K-View. Why are we looking at K-View, Kevin? Okay. All right, I'm looking at it. I'm not impressed. I have no idea why we're looking at it. Okay, here's the high of the year. Here's the low of the year. Here's where we were a year ago. Here's where we are now. Okay, she went up, she came down, she went up, then she went sideways. Now look what happened. Look past 30 days. Okay, up, down, up, down, up, down. So here, I kind of like this. Now, the reason why I like it, number one, if I like K-View, that's number one. But with that big drop like this, as big as it is, see, here's your 1690, and she jumps up to 1740. That's 50 cents. That's all it is 50 cents. But it's 50 cents on a $16 stock. Which is a little over 25% between here and here. That's a big drop. So what's going to happen tomorrow? Well, tomorrow, hypothetically, it should bounce off of that. It should. Doesn't mean it's going to, but it should. So let's keep on seeing. What else do we have? It's 11:02. FH. I keep trying to sell options, but a lot of stocks I choose move way past the strike price and I missed money. FH, you know, if you want, DM me your number. I'll give you a buzz. We can chat, walk you through a couple of ideas. That's about the best I can do. Yes, sell high, don't get greedy. FC New York, thank you. You're welcome. Oh, thank you that. Sweet Den. CRWV. 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 Core Weave. Okay. Why are we looking at Core Weave? Here we go. Here's the high. Here's the low. Look at the motion. Up, down, sideways. What's going on right there? Last 90 days. Here we go. Down, up, down, up. Down, up. Well, right there, that looks interesting. Look at the last 30. Gives me a better idea where I think. Down, up, down, up. Okay. So our high is right there at 91, and we're currently at 76, but today was a big pullback. So I'm kind of curious what's going to happen here before I jump in. Because this morning, she gapped up. She closed here at 79. And then the next day she jumps up and opens up at 83. So gapped up this morning, and now it pulled back. Why? What happened today? Thank you, Long Beach filmmaker. Thank you, thank you, thank you. All right, let's keep on going. What else do we have? I don't know that one. SOXL, we looked at that one. Core Weave, we looked at that. What are your top sell CSPs? Ooh, DeWitt, how are you today? I'm glad I enjoy listening to you talk every time. Great group of followers. Sam Fancy Sam Jammy. Okay. All right. How are you doing? How to manage taxes. Harry for good. How are you today? Trade in. We're past 11, so I'm just trying to answer questions. Ask me tomorrow about Skywater. Uh-oh, Long Beach. We select a stock we want to trade and start a relationship. Basically something like that. Think about it. Never buy something you don't want to own. That's just kind of like common sense. That one. Number 2, never sell at a loss. That's kind of common sense too. Number 3, make sure the company's consistently profitable. That's kind of common sense. Rule number 4, weekly options only. And rule 5, make sure all the numbers work. If I'm buying it, I'm selling it, what am I making and is it worth my time and effort? Now, I only want to put in 5 to 10 minutes a day. That's it. I mean, if I sat in front of my computer longer, I could probably make more money. But that's not my goal in life at this moment in time. Cool stuff by Jake. You like the shirt? Harry for good, thank you for that. We have 250 in taxes. We have 250 in taxes. I have no idea what that means, Harry. We have 250 in taxes. I have no idea what that means. Good Faith Sola, thank you for that. Raul, how are you today? Castanastra, thank you. Any suggestions? All right, so Matthew, any suggestions? I didn't see the first part because I'm looking, and if you put something in any one of your questions that gets filtered out, I didn't see it. I didn't see any questions, Matthew. Okay? Any suggestions? Following the live creator. Thank you. FH, thanks for taking my comment. Love the lesson. You're welcome, FH. M. Barbaro. Okay. How's Dell doing today? Ooh, ask me tomorrow. Jonathan! Have a nice night. You were great again. We'll do Coles again tomorrow. I'm doing Coles tomorrow. Is Coles on my... Yep, Coles is on my list for tomorrow. Load flow. Thank you, thank you. Harry, for good. I meant 50% in taxes. Dude, you definitely got to, opt out. It's called, hold on, ROE. Revocation of election. Wait a second. I saved it. I did. There it is there. Okay. Harry for good. You ready? Look at this, Harry. What is revocation of election? I'm going to read it out loud for you. You ready? A legal process established by the United States Congress that allows most state citizens to be classified by the IRS as legal non-taxpayers. So if you wanted to, you can file an ROE and say, you know what? I want to be a legal non-taxpayer. You could do that if you wanted to. The Congress, right here, established by the U.S. Congress. According to the IRS, the Internal Revenue Service, filing a revocation of election with the IRS allows about 99% of all citizens to become non-taxable with no legal obligations. File a Form 1040 individual tax return or pay federal income taxes. It's right there. It was right at the first top of the list on Google. What is an ROE? Revocation of election. Created by Congress that you can legally become a non-taxpayer. What do you think, Harry? Low power. All right, let's go down here. What do we have down here? Why would I want to see no growth in my initial investment? Oh, it's not that you're not seeing any growth in the initial investment. It is the entity in which you're investing in. Let's say, hypothetically speaking, we do CoreWeave. Just hypothetically, let's say up here, CRWV. Okay? So, as you can plainly see, the stock goes up, it goes down, it goes up, it goes down, it goes up, it goes down. That's basically all it does. Let's go back here for a second. Okay? So, when you say you see no growth, hypothetically, you bought it a year ago, you paid 41. It jumped up to 180. That's a nice rate of return. And she's back down again, back up, back down, back up, back down. Okay, so it went from 40 up to 180, back down to 70. So they go up. I learned so much from you. Thank you, Annie. They go up, they go down. That's all they do. So had you bought it here, it went down. I honestly don't care where I jump in. My main concern is the company consistently profitable. That's number one. And then I look at opportunities to jump in. Where is it coming down? Where is the bottom? She shoots up, comes back down again. So let's zoom in a little later. Okay, take a look at the motion. Up, down, up, down, up. Where's it going next? It's coming back down again because today was a big down day. So look for companies, number one, that you like. Never sell at a loss. Make sure they have weekly options. Okay, never buy something you don't want to hold on to. What else do we have? I just looked away for a sec and missed it. What stock was it? CoreWeave. Dev. It just depends if you want 52% a year with boring, stable, recession-proof stocks or 10% a year with a tech stock prone to a crash. I like the way you look at that because, that's basically what happens. The stocks I buy are boring as hell. What are your top 5 stocks? That would be Macy's, Nordstrom, Kohl's, Walgreens, and U.S. Steel. What do you think of that, Josh? All right, next. Never mind. Okay. What else do we got? Robert, haven't you put your own money into Mara? If so, why? It's not even close to being consistently profitable in terms of earnings and lack of dividends, a short history of being publicly traded. Robert, you are 100% correct. But guess what, Robert? When I get a phone call, hey, James, buy me some Mara. Okay. That's basically how it goes. Okay, you call your broker and say, hey, I like Mara. Buy me some. That's how I have Mara. What are we learning today? We're learning to invest in dividend stocks for weekly cash flow, using a simple, safe, predictable, consistent 1% trading method created for a 9-year. Why is everything in reverse? It's a YouTube thing. I'd say the V0 weekly is fairly predictable. Aurora Alpha 61. I'm not quite sure what you mean by that. I'd say the V00 weekly is fairly predictable. I have no idea what that means. Does anybody else know what that means? The V00 weekly is fairly predictable. What is that? What profit percent you exit from call options? Junior, I don't buy call options. I sell call options. And I look for the call options to go to 0 or just to buy me out. So you're relatively new here, Junior. And I'm just getting ready to leave. So I would educate you a little bit more. But if you really want to look for, okay, this is what we're looking for, Junior. You ready? Simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks, and those are companies that are consistently profitable for at least 2 decades and have weekly options. I like to jump in on a Monday. I like to be out on a Friday, collect 1% every week. 1% a week comes to over 50% a year. I'm pretty much okay with that. Matthew, PM me, want your teachings. All right, Matthew, we're going to try this. All right, Matthew, DM me your phone number and I will give you a buzz. Period. I can either call you tonight or I can call you tomorrow. There you go, Matthew. I just DM'd you. What profit percentage you exit call options? I like them to go to 0. Okay, see, Junior, I sell options. So if, all right, here's an excellent opportunity here. You ready? Thank you, Matthew. If CoreWeave, which is a stock we're looking at right now, okay, if this is at 76.86, there's a lot of opportunities for me to do. If I want to do a covered call, I'd buy it at this price here, sell this one here, pick this up. Now, if I buy it here and I sell this here, sell it, not buy it, that means I'm collecting $3 per share. It's kind of like a cash secured put, but kind of the opposite. Same thing, because you got to put money up front, you get a rate of return. So if I buy it and I sell it at $3, I want that $3 to go to $2.90, $2.80, $2.25, $1.73, $1.50, $1.40, $83, $51, and then eventually I want it to go to $0. When I'm selling that price right there, I want that to go to $0. If I'm buying, which I very rarely do, I want that price to go up. But selling, I want the price to go down, which means if I buy the stock here, 76.86, I sell somebody the rights to buy it from me at 77, which means I buy the stock 76.86. I want someone to buy it from me at 77, but I sell this option right here. I collect $3 just for the privilege of you being able to cut in line, so to speak. So think about it. You're standing in line, okay? Standing in line, a bunch of people in front of you. Yeah, someone walks up to you, hey, I'll give you $3 per share if you let me get in front of you. Same thing, kinda. Okay? That's like, what do you want from me in order for you to hold this for me for 1 week? Think about it. If I own it at 76.86 and you want to buy it from me at 77, anytime between now and Friday, okay, you pay me $3 a share and I will hold it for you. However, if you want that privilege to buy it from me at 77 and you pay me this money, you have to do it before the clock runs out. And what's the clock? 9 January. That's this Friday. 16 January. Next Friday. 23 January. 3 Fridays away. 30 January. 4 Fridays away. There's a weekly option every single week. So anything that I buy has a weekly option, because whatever it is, I really don't care. As long as it's consistently profitable and has weekly options, I want to know. Now, when I say consistently profitable, I don't mean 1 or 2 years. I'm talking 2 decades. That's 20 years of consistent profitability. WPay. Uncle Charlie, what is WPay? Never heard of it, Uncle Charlie. WPay. Round Hill Weekly Pay Universe ETF. No. You're welcome, Junior. Uncle Charlie. We pay January, February, March, June. Those are monthlies. I don't do monthlies. The numbers just don't work for me. Sorry. Chris Martin, how you doing? So hopefully that made sense. Why would I buy a stock that doesn't have weekly options? I'm looking for weekly cash flow. Why would I buy a company that's not consistently profitable? That just doesn't make sense. Well, how do we find out? Well, somebody's already done that for you. And I'm not saying me. I'm not trying to sell you anything. Okay? Somebody has already done most of the work for you. You want good companies? Great. Dividend Kings. Somebody's already doing it. Hold on a second, Uncle Charlie. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on Warren Buffett's list. That's about 300 companies right there. WPay pays weekly. I'm terribly sorry there, Charlie, but it has monthly options. Okay? WPAY, Round Hill Weekly Pay Universal ETF. Weekly has monthly options. Let's go take a look at WP No, they check that early. I'm telling you, my problem with WePay. Here's the problem I got with WePay. You ready? The very first dividend was at 2025. Do you know what that means? That means this company is not even 1 year old. You can do whatever you want, Uncle Charlie. Okay? The company's not even 1 year old. I am not at the point where I would trust my money. Company 1 year old. I say 2 decades of increased profits. This will hit my list for another 19 years. Sorry. There's over 10 different companies available. This year old. I don't care what it offers. 54, 51. That's backwards. That's backwards. 85, 73. That's backwards. 62. That's backwards. 56, 39. That's even worse. 54 to 39. Yeah, no, thank you. It's just no. Do you have manually set or is automatic if it hits your strike price? So, my assumption would be new to this and you have no idea how options work. Okay? That's just a guess by reading what you wrote. Do you have to manually sell the option or is it automatic if it hits strike? Okay. A good one. There we go. Macy's setup. Gotta love it. All right, Phantom. What I'm doing is buying the stock. 22.85. Hold up, Junior. I'm buying the stock. 22.85. I am turning around instantaneously. Do you understand what that means? Instantaneously. Which means I'm buying the stock and selling the option at the exact same time. So I'm buying it and selling it at the same time. The covered call. I buy the stock 22.85. I'm going to sell the 23, pick up 29 cents. That's going to be over 1%. What does the stock have to do? The stock has to stay above 23 by Friday. I get to collect this instantaneously, which means if I do a covered call, I dish out $23.85 per share. Then I collect 29 cents per share, which is over 1%. Now, if on Friday, 9 January, if on Friday the stock is above 23, well, I get all my money back. I still get to keep this profit. And I get all my money to buy something else on Monday. If it is below the 23 strike price come Friday, the option expires worthless. Then I still get to keep that money because that mine's instantaneously. I still get to keep it. The following Monday, which would now be 16 January, okay? I get 23 options. Now, the price I pay for it, $22.85, never changes if that's what I pay for it. What does change is this right here. Every day it goes up, it goes down, it goes up, it goes down, it goes up, it goes down. Okay, that changes every day, but my entry price never changes. So if it doesn't fill this week at 23, it might fill next week at 23. If not, the week after. But a weekly optionable stock has options every single week. Every week. So if I buy it here, if it doesn't hit my target this week, maybe it'll hit it next week. If it doesn't hit it next week, maybe it hit it the week after. I can collect a premium every single week until it hits my target. What's my target? 23. If it doesn't hit 23 this week, maybe it'll hit it next week. If it doesn't hit next week, maybe it'll hit it February. It might hit it in February. But I can write a covered call every single week until I'm done. Hopefully that made sense. Junior, QYLD, hell no. How you like that one, Junior? Hell no. QYLD. Try it again. QYLD. Two reasons, Junior. Number one, January, February, May, August. It's a monthly. I don't do monthlies. The numbers are absolutely horrible. So I just don't do them. That's number one. Look at the premiums. 0, 0, 0, 0. Yeah, no thank you. But QYLD. Profits look like. Google and both, right? Yes, one prefers stock and one's not a stock. Hold on. I love what you're doing. Thank you. You are. So, Junior, check this out. You ready? We want to look at 2 decades of profit QYLD. QYLD all the way back 2018. The very first dividend, 2014. It was 25 cents. First dividend, QYLD, 25 cents. The second, 19. That's going backwards, Junior. That's down. Down is not a good thing. Okay, you want to make sure that they're profitable. Now, going from 25 to 19 is not my idea of profitability. You know, if it was 25 and a half, 26, 27, 28, don't care as long as it's higher. But no. 25, 19. Okay, that's down. That's once. 26, 24. That's down. That's twice. 21. That's down. That's 3 times. 20. That's 4 times. 22. That's up. 19. That's down. That's 5 times. 24. That's up. 14. That is almost a 50% decrease. Junior, do you see that? Dividend October 22, 2014, 24. 24. The very next dividend, 14. That's almost a 50% decrease in 1 month. Yeah, not very good. Okay. It goes 14, 23, 16, that's lower. 15, that's lower. 16 higher, 15 lower. 15, same. 20, 22, 21, lower. 18, lower. 21, 22, 15, lower. 17, 20, 14, lower. 13, lower. 19, 14, lower. 16, 14, lower. 12, lower. 10, lower. Do you see what's happening, Junior? Higher, lower, 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 higher, higher, lower, higher, low. It's all over the place. Not consistently profitable. And it's a monthly. No, hell no. Okay? What are you thinking, Junior? Why would you do that? Why would you want to buy a company that's not profitable? Okay? Now, I didn't go to college, I admit it, but I do know if I'm at 16 1 month, then the next month it goes to 14, well, that's lower. And then the next month it goes to 12, that's even lower. Then the next month it goes to 10, that's even lower. That's 4 months in a row. No, 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 hell no. Anyway, Junior, check this out. Okay, when I say see profitability, it should look something like this. For 2 decades, which go all 6. Okay, it's 2000. Tooths right there. 9, 10, 11, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Junior, did you notice each and every year the number got higher and higher and higher? That is consistently. All righty, what else do we got? What's the difference between Google? Justin, thank you there, Justin. What stock was that? That was Microsoft. What do we have here? Why is everything in reverse? It's a YouTube thing. If that's good for all, power to you, sir. Okay, that's good. What is a company's best reason for monthly options versus weekly plays? I don't know any company that offers weekly options. I mean, no, weekly dividends. No, wait a minute. There are a lot of companies that offer weekly options. What's the name of the place? What's the name of the place? Bria, I have no idea what you're talking about, but okay. What time is your chart? It's a 1-year chart, 90-day chart, 30-day chart. Welcome to Morocco, my dear brother. Welcome to you. Crypto is the future. Stop trash talking, old trader. Well, thank you for that, Max Treman. I thank you very much. I appreciate you putting. Thank you. But he is right. Cryptocurrency is the wave of the future. But people still need to work somewhere. And I don't know a single cryptocurrency that I know of that has any consistency, predictability to it whatsoever. I mean, they go up, they go down, they're extremely volatile. I like safety. I do. And I do have my own crypto. Well, not yet, but I am working on it. There's my own crypto right there. Okay, that is on the list for this year. Actually, it's on the list for this month, so I'll have my own crypto this month. How often do you do these streams? Sunday night, Monday night, Tuesday night, Wednesday night, Thursday night, 9 p.m. Eastern Standard Time until about 11, which I'm way past. Have to drop. Have a great night. You too, there, Vino. Nice seeing ya. Sunday through Thursday. Thank you, Dev. Offerings. Is this investing advice or just entertainment purposes only? Okay, long list of errors. It's basically entertainment only. I sing, I dance, and I actually play the didgeridoo. Anyway, let's keep on going. Thanks a lot for your time. You're welcome, Junior. All right, what else do we have down here? Don't. Long list of errors. Mega clown trends. Well, thank you there, Max Fryman. Long list of errors. It's option trading, but you are selling covered calls and you get paid on a weekly basis until you close out. Yeah, that sounds about right. You guys do the wheel. Sometimes yes, sometimes no, but for the most part, no. Good luck. It was friendly advice. Buy Dash. No, I ain't buying Dash. USD, next leg. I got it. Good night. Yep. GL. All crypto goes to zero. Maybe it will. Maybe it won't. Errors. Any strategy besides covered call required subscriptions to James's morning group. Thank you, Dev. Phone calls are free. Yes, they are. Consultation is free. Yep, give me a buzz. I'll talk to you. Hello, please look up MU. Isn't that Micron? MU. MU. Micron technology. Okay, who came up with that? Micron technology. Okay, Imran K2. Why the hell are we looking at this? Hold on a second. Hold on. The high of the year was today. Explain to me in a manner in which I'll understand. Why are we looking at a stock that's at the high of the year or high of the 30-day period? That just makes no sense. Will Tesla cool off? I don't know. Tesla's not on my list. Okay, they don't have dividends. How much did he earn in clear in 2025, or is that inappropriate? Well, who are we talking about? Are we talking about me? Are we talking about someone? Will Google go up? Of course it will. It'll also go down. Imagine that. It goes up, it goes down. They all do. All his trades are posted on the website. Yep. He should just share his screen so everything isn't backwards. Kind of silly. You know, I'm going to agree with you 100%. Who said that one? Long list of errors. But see, the funny thing is, if you go to YouTube and you look up how long have I been posting on YouTube and how many videos I have on YouTube, 1,500 videos on YouTube. And almost all of them are backwards. Why do you think that is? Do you think that I just can't do it? Or do you think there's a slight problem somewhere? There is. There's a problem somewhere. So you're not the only one to complain about it being backwards. But until you know a way of turning it around, let me know. Thanks. I'll check it out. There's another stream. The screen is completely, explicitly by itself. Yep. Oh, prove I'm human. Yes, I am. There you go. I lost on your Heinz recommendation. Thanks a lot. Okay, blank. I hate to be the bearer of bad news. KHC, Kraft Heinz. Blank. I lost on your Heinz recommendation. Thanks a lot. Now, I'm a little bit curious because, number one, I don't give recommendations. Number two, I don't give tips. If you made an error and you bought Heinz ketchup, that's a you thing. You see, 23.77, the closest strike would be the 24. The 24 is paying 10 cents. That's a 0.5%. I may have bought Heinz 3 or 4 times in the last 20 years. I usually don't buy it because the numbers don't look good. So you didn't get a recommendation from me because I don't give recommendations. Sorry. Go to the YouTube channel. You'll see another stream. Yep. Have a great guys tomorrow. See you out early. Got that one. What do electric cars and diarrhea have in common? She bought SoFi in a consultation and sold the RIP, though. Okay. Patrick, how you doing? Happy New Year. Thank you. Let's do it tomorrow. Does this guy use technical analysis or his opinion for his option trades or strictly fundamentals? Okay, long list of errors. It's kind of both put together. Number one, you won't make the list unless the fundamentals work. And then, thank you, Sprite. And then it's all technical analysis and stock movement. It might be worthwhile to put Apache and DVN on your watch list for a good entry point in the next week or so. Well, Robert Myers, DVN I already own, and Apache I already own also. So I do look at them every week. How do you feel about UFG? I have no idea who UFG is. UFG. Unifuels Holding. It has no options, so I'm going to say no. The Bloxy Tornado Chasers. Did you know if you climb an apple tree, there will be no bananas? Wow. John, what do you think will be impacted after the capture of the Venezuelan Don't know, don't care. See, you're under the impression that I actually follow politics and that crap. No. You have any idea what the American economy has seen in the last 100 years? You really think this little glitch is going to create some havoc? It will. It will pass. Things will even out. Brittany, UFG. Didn't we just look at UFG? Yeah, that's going to be a no. No option. Sorry. APLD. Ooh, APLD. Oh, look at that lovely jump. That was lovely. Nice. 30.20 at the moment. So the 30s are going for 229. I love that number. Look at the last 30 days. Up, down, up, down. Now it's bouncing up nicely. Yeah. It's on my list. Sorry, had to write that one down too. Ticker. Jay Gardner. ExxonMobil. XOM. Hell no. Now, don't get me wrong, ExxonMobil is on my list, but why would you show me something that's at the high of the year? What possible trade can we make on it that's going to be predictable and safe? Okay? She goes from 114 up to 126. That's a nice move with that $12. Okay, that's over 11%. Didn't IBM do really well last year? Kind of, depends on where you were. 20%, 6% of 1 million is 260,000 a year. Sounds pretty good at any age. Well, that's if you got 1 million. What if you only got like 30,000? Okay, 26% is not enough. What age did you start to switch from choosing more volatile high growth to more reliable stocks? Yeah, that was about 10 or 15 years ago. Because my 9-year-old daughter said, Dad, what are you doing? Can you teach me? Why not synthetic covered calls? Synthetic covered call. Okay, Chris Martin, can you explain synthetic covered calls? I've been trading for, quite a while, about 30 years or so. I'm thinking what you might be calling a synthetic covered call might be something else. Okay, but what do you think a synthetic covered call is? Yep, I'm still starting a hedge fund, Dan. I got a few minor details to take care of first. What age did you start? Yeah, that was a couple of years. That was about 10, 15 years ago. How do you leverage this technique in a bear market? Never buy something you don't want to hold on to long term. That's it. Think about it. Stocks go up, stocks go down. Even in bear markets, stocks go up, stocks go down. Think about this for a second. Now, we've seen a lot of crap in the last 5 decades, right? What do I think about SPY puts when it reaches 690? I don't do it. I don't pay $6.90 a share for something. And I don't do SPY because SPY is not consistently profitable. Okay, you take a look at the dividends SPY has paid out. They go up, they go down, they go up, they go down. I like consistency. SPY is not consistent. I like Modelo as well. Okay. La, 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 la. Can you please talk about Nissan stocks? No, they don't fit. Think about it. If it fit, okay, I would be buying some, but it doesn't. What is your portfolio value? Why do you ask? I'll tell you what, DM me your phone number. I'll give you a buzz. You tell me what your portfolio is. I'll tell you what mine is. I think that's fair. AMD Advanced Micro Devices. "12 weeks. Start fresh. 12 weeks is so far still on track towards 1% more or less weekly. Start fresh. Congratulations, dude. Just keep at it. 1% a week. It's 50% per year or more. I mean, if you're okay with that. I'm okay with it. Ilavani. Ilavani? Is that right? Nissan? You got to give me the ticker symbol because I don't think NISSAN is a ticker symbol. Yeah, that's way too much stuff to look at. Jasm. I don't really invest in stocks, but if I did, I would invest in NVIDIA, any sort of nuclear energy, any sort of machine learning companies, lithium, etc. All right. I thank you for that. Mike Sweeney, what do you do if you have to lower your strike price? Then it gets called away, sure, and you lose money. Well, Mike Sweeney, number one, you should keep better track of your stock, number one. Okay, anytime you lower the strike price, you really should set an alert. Okay, because when the stock goes down and it bounces back up again, set an alert. So if it gets to this price, take a look at it. Okay, Mike, there's always ways of out of a situation where you don't have to lose money. Okay, now I don't know why you got yourself into that position, but if you want to give me a call, I'll take a look at it and give you my opinion. So maybe it won't happen again. So let's keep on looking. What else do we have? So Jasm 91. I wouldn't do NVIDIA with your money. The reason saying synthetic calls covered. Okay, see, I hear what you're saying. I understood the first time you said it. Synthetic calls covered. What does that mean specifically? Think about it. What does that mean specifically? Synthetic calls covered. What does that mean? Okay, am I buying the stock or am I pretending to buy the stock? Am I selling the calls or am I pretending? It just doesn't make any sense to me. Stay away from quantum computing. Okay. Weekly dividends explanation, please. A senior 9806. Weekly dividend explanation, please. I don't know where you got the idea of weekly dividends. Maybe it be a misinterpretation of the title, because the title of the show is Dividend Stock Talk. That's the title. The subtitle is, listen closely so you don't misunderstand it. Investing, wait a minute, dividend investing for weekly cash flow. It doesn't say anything at all about weekly dividends. It says dividend investing for weekly cash flow, which means we're investing in dividend stocks that have weekly options that allow us to buy dividend stocks and to profit on them on a weekly basis. Weekly dividends, dividend investing for weekly cash flow. Okay, that's what it means. China is doing really well in the quantum computing space. Yeah, okay. Long list of errors. NVDA could be the next Kodak in 10 years. That's why I pass on individual investments. Well, I don't pass on individual investments. I pass on NVIDIA for one reason and one reason only. NVDA is in. So let's take a look at NVIDIA. Pick it apart a little bit. Okay? Now, the main reason I don't like NVIDIA, the main reason I don't like 89, 109%. That's what the shares are going for. What is the dividend? Now you're paying 180 per share, and your dividend is 1 penny. It hasn't increased that much in quite a while. Okay, so that's the reason why I don't like. Are you ready for this? Who came up with the video? A long list of errors. Second reason I don't video. See it here? Revenue per share. Okay, this is a statistic of the company. How much money do they have coming in for each share that they have outstanding? $7.60. Okay. 7.67 cents. $7. Just under $8. It's $189. The revenue is $7.60. Hold on, it gets worse. All right. Now, not only that, let's slide down a little bit lower. Book value. What book value means? Value basically means that's the value of the company once you add everything the company owns. Google it, that it covered call. Really? I'm not going to tell you what it is. Synthetic strategy. Okay, what is our stocks? Blah blah. Synthetic covered call strategy is an option trading approach that replicates the payoff in a traditional covered call without requiring ownership of the stocks. Okay. The overview of the strategy involves using options to mimic the rewards, which means blah blah blah. Oh, that's a poor man's covered call, is what it's called. There's two different ways to look at it. It's called a calendar spread. That's where you buy an option further out in the distance and you sell one up close. It's called a calendar spread. Okay, synthetic covered call, calendar, also known as a poor man's covered call. Yeah, there's some good parts about it and some bad parts about it. You could have just told me that, brother. Honeywell had an interesting day. Ding, 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 winner. Yeah, well, you had me go, you know what? Whatever. It is what it is. I don't really do them anymore because it's a lot more effort than they're worth. What else do we have? No theoretical practice applications. Oh, wait a minute. Way too many questions. I'm not sure what will happen to the global economy. I'm sure other countries will have some developed, some sort of defense to protect themselves. Oh boy. Crypto can just about buy a coffee. No, it can't. Not yet it can't anyway. I can't go to Dunkin' Donuts or Starbucks or Faye's coffee shop and buy anything with crypto. But I can convert the crypto into US dollars. So in that part you can, but you need something else to work with it. Anyway, let's get, what else we got? Thank you, you're welcome. Dev. Oh, a didgeridoo is an ancient, iconic Aboriginal Australian. I didn't think anybody was actually paying attention to that. Deep drone sound. Yep. Really gay vibes. Thank you there, Big Bob. He has children and multiple girlfriends. No, I only have one. Don't touch NVIDIA. No dividends. Yeah, I believe you there. Are you still live now? I got nothing else to do. The girlfriend's sleeping, and I got so much paperwork. It's the end of the year, and I really should be off doing paperwork. Okay, so I think that's what I'm going to do. What else we have? The Gardino Senior stream is down. Oh, no. The other one's still up. All right. Okay, just checking. Thank you. It's late. Yes, it is. Hi, by the way, nice to see you. Thank you there, Dev. YouTube, bro, but keep it. Okay, that's basically it. All righty then. That's everything done. What's the down part? Uh-oh. Chris, what are you talking about, down part? Quickly, Chris, I'm getting ready to sign off, so hit me up quick. What do you mean by the down part? All right. Matthew, do you have a guidance manual? Believe it or not, I do. Poor man. Oh, the poor man's covered call. What's the down part? Oh, yeah, if it doesn't work. Think about it. Okay, so when you buy an option further out, let's take a look. We're at AT&T. So let's go all the way out to September. Okay, we'll go out to September. Now, the current price right now is $24.71, so let's buy the 25. The 25 is going for $1.91. Matthew, I have 3 stock platforms, but I am still learning. I need the platform that I can trust in Canada. All right, Matthew, I really can't help you out with that because we're here in in Florida, which is in the U.S. Now, I know Canada doesn't like Think or Swim, but they do have Charles Schwab, I believe. But here's the thing. I like Thinkorswim. I've been using this trading platform for over 20 years. They have not changed in 20 years. That's the best thing I like about it. That the same thing I learned 15, 20 years ago is the same thing that they're doing nowadays. So, we're looking at the poor man's covered call. All right, so let's do this. Change this to calendar. There it is right there. Okay, get this out of the way because we decide we're going to do the 25. All right, so we're going to do this one here. And we're going to do the 25s. All right, there it is. Okay, so let's go all the way to one contract. Okay, now I don't want to do March, April. Interesting. The synthetic covered call is a leap and a short call. Yes, I'm aware of that. Basically, you buy a call option very far deep in the money. Yep. It will pay you a lot of intrinsic value for it. Not necessarily so. Okay, so I want to buy all the way out to July. Okay, and then I want to sell January 16, which is next. Okay, now, yep, a leap is usually 1 year or more in duration. Yeah, but Dev, on a calendar spread, and if you're going to do it on a weekly basis, you're best going 90 days or further. You don't want to go too much further out because if the stock moves a lot, you cannot sell. All right, so if I buy this one here at 25 and the stock goes up to 22, the 25 is worthless and you can't sell anything against it because it drops. And as the more it drops, the less you get in return. And if it goes up too high, you're paying too much for it. It gets to be a challenge if you go too far out. Now, I did two. I did one on Macy's, and it ended up short like 1,800 shares. And I did some on DVN, Devon Energy, and I got burnt in the butt. So I don't do them as much as I used to. Yeah, I do deep in the money. Yeah, I get that. Okay, this is what we're looking at. Check this out. Why did that turn off? There it is. Give it a second. Okay. So down here, buying I'm buying 17 July and I'm selling 16 January, which is next Friday. So let's see what that looks like. Okay. One of the challenges about the poor man's covered call or the synthetic covered call or the calendar spread, they're all the exact same thing, just different names. That's what threw me. Okay, so if I buy July 17 and I sell January 16, okay, it's going to cost me $1.28. Well, how much am I making? I have no idea. That's one of the bad things about the poor man's covered call, the synthetic covered call, or the calendar spread. But if I buy all the way out in July, I can write a covered call against it this week, next week, the week after, week after, week after, all the way up until the 17th of July, which gives me a lot to do. But if the stock goes up too high or goes down too low, then it's very challenging to get any profit from it on a consistent basis. Okay? We're at 12:01. I'm going to call it a night. We're going to do the same thing all over again tomorrow. That being said, you guys have a great day, and we will see you again tomorrow. I really wouldn't do this on a volatile stock. It's good for really stable stocks that you know that will be up in time of expiration. Yeah, Dev, I learned my lesson years ago. Okay, I've come to the point up the leap every week. Yeah, but then you're spending money every week. And are you bringing in enough to make up for the money you have to put out every week? It's a lot more effort, Chris. Have fun with paperwork. Yeah, thank you. Chris, 11 p.m. Eastern tomorrow. I'm on at 9 a.m. 9 Eastern. 9 p.m. Eastern. Chris, have a good night. All right, so that being said, you guys have a good night, and we'll do this again. Oh, I would never do it nowadays. Yep, way too much risk. Hey, I don't blame you. I mean, it used to work out great years ago, but nowadays with all that movement, the calendar spreads, they work great when they do work. But when they go the wrong direction, then it's really tough to get out of them. Because I'm short on Devon Energy and Macy's because I did the covered call, and then someone kept exercising the tail end, which made me short. Nope, I don't do silver because silver doesn't give you weekly cash flow. That being said, you guys have a great night, and we'll do this all over again tomorrow. And now the end is near, and